With the overall market coming into correction for the past couple of weeks, there is definitely a lot of stocks that have become severely oversold and are at a great place to potentially invest in long term. And as you all should know by now, as investors, we need to buy when there is blood on the streets. And right now, we are bleeding. All right, so if we just quickly take a look at the indexes, the S&P, SPY, S&P 500, we have corrected back into the 50-day moving average, which is usually a place where we tend to bounce. And we actually did get a pretty good bounce today, closing above the 50-day moving average. The volume was slightly less than yesterday, which is a little concerning. However, it is 100% possible we could just bounce from here and continue our uptrend. 100% possible we could just consolidate. 100% possible we could just bounce and go back down. All right, but the main concern about this correction is the Nasdaq, the QQQ. The correction was much stronger and much faster and much more volatile on the technology names on the Nasdaq. All right, so we actually corrected from top to bottom around 12%, 12.5% in a matter of 3 weeks. All right, so because the overall correction happened much more severely in the technology names, I feel there's tremendous opportunity to get back into these names, giving us a huge discount. Okay, and the reason the Nasdaq names and growth names got hit so hard is because of the rising bond yields. So bond prices fall, the yields rise, long-term interest rates increase. What this essentially means is people are confident that the economy will recover with the vaccines coming in, with COVID getting out the way, with reopenings happening. People are confident the economy will recover and we could get back to our old ways pre-COVID. And although this is a great thing, this is a phenomenal thing, with a booming economy, inflation comes with it, which is the main concern. Right? So with inflation, it means the Fed will raise their rates, even though they said they wouldn't for the next 2 years. And they may cut the stimulus. So there's a whole bunch of fear going on with rising interest rates. When that happens, money flows into value stocks, money flows into cyclical and defensive stocks, flows into banks, all those type of names, and goes away from growth, which is exactly what's happening right now. As the stock market is a discounting mechanism, this is exactly why the Nasdaq is getting hit much harder than the S&P 500 or the Dow Jones per se. So, with all the fear and panic going on in the technology names, I believe this is an amazing opportunity to get into some oversold names that are still great businesses, but now present a better risk to reward ratio where we're confident in the next 3 to 5 years, the stock price of these companies will be significantly higher than it is today. All right, so let's begin with the first of 5 companies I am buying for the long term, Mohawk Group Holdings. So with Mohawk Group Holdings, first and foremost, I always want to invest in a stock that has good technicals, good chart. Now taking a look at this stock, it has exploded in the past couple of months and corrected with the overall market back into the 50-day moving average. So it is still holding its 50-day, and I do believe this is a great spot to potentially start an investment. For Mohawk Group Holdings, the company itself, it is a small cap stock, but I definitely believe this has potential to continue upwards. I do want to give credit to Jonah Lupton for bringing this stock to my attention. He did a lot of the research, and it was brought to my attention from him, and I actually took a look at it myself and noticed this is actually a great company. Mohawk Group Holdings, MWK, they actually are an e-commerce company that combines artificial intelligence with it. So this is great to see. They basically disrupt the e-commerce space with its AI technology. And if we take a look at the company profile, it primarily serves individual online consumers through Amazon and other e-commerce platforms, as well as through its owned and operated websites and other marketplaces. That doesn't really tell you much. However, doing more research on the company, with their AI technology, they are able to identify emerging product trends and find possible opportunities to take advantage of. Also, they obviously sell their own stuff, operates as a technology-enabled consumer products company in the United States and internationally, provides home and kitchen appliances, kitchenware, environmental appliances such as dehumidifiers and air conditioners, beauty-related products, and consumer electronics under the Home Labs, yada, yada, yada. So yeah, this is basically essentially just an e-commerce company using AI to not only save money, but also find upcoming trends, which is beautiful to see, especially because of how fast e-commerce is growing. If we take a look at the revenues, growing every year over year. This past year, 56.51%, 2020, 59.95%, 2021, 87.26%, 2022, 22.85%. Currently, they're not profitable, but they do plan to be profitable this year, 2021, and then next year they plan to grow at 61.39%. So that's great to see. Also, that the earnings plan to be $342 million for 2021 revenue estimates, and they're currently trading at, where's their market cap? Sorry, market cap. Right here, market cap 1.1 billion. 1.1 billion. So currently they're only trading at around 3 times their sales, which is pretty undervalued. So I do believe this stock definitely has much more room to run, and if it could find consistent support at this 50-day, great spot to add long term, as I do believe this could possibly double or triple in the next couple of years. All right, so that's my first stock, Mohawk. The next stock on my list is Pinterest. All right, so I'm sure many of you know what Pinterest is, but if you are one of the few that don't, or one of the few that don't have it installed in your phone, the company profile is they provide visual discovery engine, and the company's engine allows people to find inspiration for their lives, including recipes, style, and home inspiration, DIY, and others. It shows them visual recommendations based on people's personal tastes and interests. So say you're looking to do a project such as redecorate your room. You could go on Pinterest and search up redecorate your room, and it'll give you a whole bunch of options, whole bunch of ways to redecorate your room that you would like, to style it the way you would like it, and it would give you visual recommendations such as pictures to show you exactly how you'd want to do it. Or even if you're like it said here, for recipes, if you're looking to cook a meal that you've never cooked before, you could search that meal up and it'll give you meal recipes, stuff like that you could follow step by step. So this company is actually amazing. I've used the app myself and I really love it, which is why I'm really bullish on this stock, as well as the fact that they have a lot of room to grow with their digital advertising, as well as the ability to monetize in the future. They definitely have lots of room to grow. And if we take a look at the revenue, it has been growing already for the past couple of years. Revenue growth 48% year over year. 2021 48% as well. 2022 35%. 2023 31% year over year growth. Great to see. All above 30%. It is already profitable, so the earnings per share 2021 98% growth. 2022 50% growth. 2023 63% growth. That's beautiful. It's great to see. To showing you how much Pinterest is growing as a company. Their gross margins aren't as good as you want them to be, but nothing's perfect. Gross profit margin 73%. The rest is in the negatives. Market cap is 46 billion, so it is a little bit rich. However, like I said, with the possibility of it beginning to monetize and having more ads on its platform, the revenue will accelerate with it. And if we take a look at the institutional sponsorship, 69% of the shares outstanding is held by institutions. So that just shows you how much of the big boys really like this stock. You want to see stocks with high institutions due to the fact that they want to hold it, right? You could search up exactly what institutions hold it. The fund ownership has been increasing consistently for the past couple of years now. And if we just take a look at the stock itself, it has been a market leader since July. Great uptrend until recently, this past few weeks correction. It did undercut and rally above this previous low. Volume on the down days is a little bit higher, so that is some caution. However, we're not trading this, right? We are going to invest in this, and we're going to invest for the long term. So we're not worried about day-to-day fluctuations. All we're worried about is this price, 68.14. Is this stock going to be higher than 68.14 in the next 2, 3, 4, 5 years? And the answer should be yes. All right, you don't want to invest in a stock where the answer to that is no. So with Pinterest, I do see this going above the hundreds in the next few years, possibly in the multi-hundreds. So I am very bullish on this stock and is something I want to load up on. So that's my second stock I'm going to be investing in. And the third one is Peleton. So Peleton is a very interesting company. It definitely got a lot of recognition due to COVID. A lot of people, were forced to stay at home. So people chose a Peleton to actually put it in their homes to stay in shape. But now it is getting recognized just for its brand alone. Peleton is becoming a verb, and when a stock becomes a verb, that's how you know that the stock is reputable and it's here to stay. Peleton, you want to be a part of that community now. Like, you hear a lot of people just talking about working out with their Peleton, having competitions with their friends, staying in shape, all of that stuff. So Peleton is actually it's a very good company. And if you don't know what it is, sorry, I just kind of went off there. It provides interactive fitness products in North America and internationally. It offers connected fitness products such as Peleton Bike and Peleton Tread, which includes touchscreens that streams live and on-demand classes. So you could basically do live and on-demand classes from your home, on the bike, on the treadmill, like you're in a gym full of other people doing a class, but you're in the comfort of your own home. Provides connected fitness subscriptions for multiple household users and access to all live and on-demand classes. So when you're just not motivated to work out, you just put on a class and then boom, you're just working out with a trainer. It's actually a great business, as well as Peleton digital app for connected fitness subscribers to provide access to its classes. As of December 9, 2020, it had approximately 3.6 million members. Company markets and sells its interactive fitness products directly to its retail showrooms and at onepeloton.com. 3.6 million subscribers, and I know that's growing every month. And I've been hearing it's actually been great business itself. They have great customer service, all that stuff, and then demand has been hard to keep up with. So yeah, Peloton's a great company, and taking a look at the overall stock, it actually corrected from 171 to 100. That's a huge correction in the past couple of weeks, sorry. From top to bottom, that is a 45% correction. And the great news is it came right down to its 200-day moving average. And if you know anything about technical analysis, 200-day moving average is the last stand for bulls to keep this stock in an overall uptrend. Although it did almost undercut this lows, it did find support at this 200-day moving average. So this is a great risk to reward spot to buy long-term shares, and this is what I'm going to be doing myself. Just holding it for the long term. It could definitely go back to all-time highs eventually. Obviously, with these stocks, the charts are broken. However, like we said, we're not trading it; we're investing it for the long term. And right now, these are bargains for Peleton at $100. Because if we take a look at the company, market cap is only 31 billion, but the growth is outstanding, right? So look at the growth, just the bar chart by itself. June 2020, 1.83 billion, 2021, 4.11 billion, right? So the growth is 139%, 2021, 125%, and then 2022, 2023, 37, 29%. And it also is profitable. The earnings are growing 2022, 125%, and 2023, 115%. So the growth is phenomenal. The gross profit margins are great as well, 43%, 7, 5, 9, 4, all good margins. Also, institutions, 74% of the stock is held by institutions. So in my opinion, Peleton is a great opportunity to buy at this 200 moving average, especially because of 45% drop that just occurred. The stock had a huge run from its from the COVID lows, $17.70 to $171. Now it's coming. Now it's coming back to the 100 level, which I believe is a great opportunity to buy for the long term. Next few months, it could be a while before the stock, sets up properly again. However, like we said, investing for the long term, not worried about day-to-day fluctuations. All right, so that's Peleton. And the next stock that we have is SEC Limited. So if you don't know what C Limited is, it's probably one of the coolest stocks out there. I did say cool. It's basically a three-headed monster is what a lot of people say, and for good reason. It essentially focuses on the three main themes of the world right now. Focuses on e-commerce, digital payments, digital finance, as well as esports, digital gaming, stuff like that. So if we take a look at the company profile, engages in the digital entertainment, e-commerce, and digital finance service businesses in Southeast Asia, Latin America, rest of Asia, and international. So that's where the three-headed monster comes from. These three right here, the three biggest themes of the world, they are all the leader in it in Southeast Asia. Provides Garena digital entertainment platform for users to access mobile and PC online games, as well as esports operations and access to other entertainment content. Live streaming of gameplay and social features, which is huge nowadays, such as user chat and online forums. Company also operates Shopee e-commerce platform, which is, as you guys know, e-commerce is huge. Mobile-centric marketplace that offers integrated payment and logistics infrastructure and seller services. In addition, it offers C-Money digital financial services to individuals and businesses, including e-wallet and payment services, AirPay, Shopee Pay Later, and other digital financial services brands. And payment processing services for Shopee. So as you see, like three-headed monster for sure. They tackle all those different themes, and they do it very well. Taking a look at the revenue growth has been a strong acceleration for the past 5-6 years. The revenue growth has been amazing at 101%. And then the 3-year compounded annual growth rate, 119%. 2021 estimates, 72% year-over-year growth, 2022, 35%, 40% in 2023 for its revenue. And then for its earnings, it's not quite profitable yet, but they are on their way to becoming profitable. 2023 they do plan to become profitable. So that's why it doesn't look so great right now. But because of the fact their growth is so tremendous, as well as they're the leaders in their industry, is why I really like this stock and I want to pay attention to this stock. If I take a look at the financials here, if I take a look at the year-over-year growth quarterly, it has been outstanding for the past couple of years. 100%, 156%, 82, 126, 137, 197, 174, 103, 102, 98, 101. This is all growth year over year, or quarterly year-over-year growth. So every year they're doing better than they did the previous year, that quarter. And that's what you want to see in a company. Once they become profitable, a lot of this will look much better. But if the stock is doing these type of numbers and they're not even profitable, imagine what happens when they do become profitable. All right, so I do believe this is a great opportunity to buy shares for the long term. Once again, we don't know where the price is going to be heading in the next few days, next few weeks. However, with its overall business and the overall numbers it has, and it hovering around the 50-day moving average, this is a great opportunity to buy for the long term. If we take a look at its historical price, the 50-day moving average has been basically its support level. Every time it's hit the 50-day moving average, it's bounced nicely, bounced nicely, bounced nicely, bounced nicely. Let's see if we can get another bounce again for the long term. Once again, like we said, we're not really worried about day-to-day fluctuations, because what do we think about for investing 3 to 5 years from now? Is this price $229.76? I keep saying that. Is this stock going to be higher than $229.76 in 3 years and 5 years? And the answer should be yes, once again. So that's why I'm really bullish on this stock, and it is one stock that I'm going to be buying for the long term. And the last stock I'm going to be sharing with you guys that I want to buy for the long term is TIGR, TIGR. All right, so TIGR, or Up Fintech Holding Limited, is essentially just a brokerage firm focusing on the Chinese market. If we take a look at the overall company, provides online brokerage services focusing on Chinese investors, developed a brokerage platform, which allows investors to trade stocks, options, warrants, and other financial instruments that can be accessed through its APP and website. So yeah, it's essentially just a brokerage service. But the great thing about it is its revenue and earnings growth. This is something you cannot deny, you cannot not look at, especially because of how strong and how fast it's coming. If we take a look here at the earnings growth, huge acceleration. Earnings growth year over year, 128%. Next year, 71%. The year after that, 51%. So that's all above 50%, which is amazing. It is profitable already, and for 2021 has 131% estimate growth. 2022, 90% estimate growth for earnings. Great to see. Gross profit 82.86%. Net income 7%. Return on equity, return on assets 4%, and 0.74. This is a relatively new company, so not a lot of institutions hold it. So it still has to prove itself before it gets, that high reputation. But the fact that it is online and it does have very slim competition is why and the fact that it is growing so rapidly, it is why I'm very interested in this stock. And if we take a look at the technicals, it had a huge run up in December to February from basically $6 to $38, correcting nicely here, holding the 50-day moving average. Hopefully it could hold for the next few days as well. But like we said, we're not really interested. We're not really worried about day-to-day fluctuations. This is a great spot, great risk to reward ratio for a long-term buy. And this is where I'll be initiating a position and holding for the long term. All right. Yeah, and that's pretty much it for my 5 stocks that I'm looking at. Just to recap: Mohawk, Pinterest, Peleton, C Limited, and TIGR. And please remember that I am not a financial advisor. Everything I say is just for entertainment purposes. Please do your own due diligence before buying, selling, or doing anything with the stock. Please do not follow me blindly. This is your hard-earned money at risk, so please use it wisely. But besides that, these are the 5 stocks that I'm looking at. If you have any companies you're looking at, please leave them in the comment section down below. If you did like this video and I earned your thumbs up, please smash that like button. Share with your friends and family looking to potentially invest in the stock in the next couple of days. And subscribe if you haven't. All right, I really appreciate if you stayed with me this long. Thank you very much. Have a wonderful day. Take care.